My account is up over $200,000 this year, and I'm not day trading. I'm not buying options. I'm doing very boring stuff, but it's consistently helping me replace my income, and I'm only spending about 15 minutes a week on this. If you want to hear the secrets of what I'm doing inside this account to help me generate those returns, I'm going to give you the 5 no BS rules that have helped me succeed in the markets over 10 years of learning, struggling, failing, and eventually succeeding in hitting record profits this year. Again, this is only one of my accounts that I trade off of, so there's a lot more profits from the others. The number one rule I want to talk about, and this goes for everybody out there that has account values under 25K, is stop rushing. Even people at the 100K level do rush. Even people at the $1 million level do rush. So here's the question I want you to ask yourself. You have 2 choices. Would you rather double your account with no strategy and only do it once? Or would you rather double your account every 2 years for life? The answer is simple, but it seems like we're always choosing the first option, which is trying to get there faster without knowing anything about the system, the markets, in and out, the execution, and that's leading us to consistently blow up accounts and keeping us in this small account mindset longer. So this is kind of the beginning phase of traders that I see all the time. And think about it. If you started out in the markets, what are you going to put in your account? Probably $5,000. That's the first year. And when you have $5,000, what do you want to do with it? You probably want to make 5K or 10K. So you're trying to do that 2x with no strategy route. And again, why wouldn't you want to just 2x every year for life? Why wouldn't you choose that one? It seems obvious saying it now, but everybody's always going this route. And they spend years going this route because they're in this small account mindset that if I want to replace my income, I need to make 5K, make 5K. And so they do that in year 1, 2, 3, 4, 5. And guess what? They're always doing the riskiest stuff because that's the only way you're going to double your account. Futures, 0-day options, short-term swing trades, you name it. The riskiest stuff they're doing because they have this small account mindset. But let me shift your mindset. Let me give you a different perspective. What if you took that $5,000 and every single year you added money to it? And what if that $5,000 never disappeared, but in fact increased in value over time? So after 5 years, that amount of capital you would have put in is $25,000. It doesn't become small over time because if you add to that account and treat it like a big account from day one, you're going to be in a better place to replace your income. And I'm going to show you the math to prove it to you. So if I pull up here the compound calculator, this is going to show you exactly what the potential is if you grew your account slowly. And I'm going to show you the strategies that allow this. But if we look at month 1 here and you had 70,000, which is unrealistic, we'll say 25,000 just for the sake of if you blow up 5 accounts, that type of thing. And you shoot for like a low return. And when I coach my students, like it'd be a failure if we hit a 4% month. Some people are doing 20. So let's say you hit 4%. And again, you spend 5 years struggling day trading. That's the other side of the coin. But the coin I'm trying to teach you today, the other side of that coin is, can you grow your account safely? Can you do low risk stuff? And be okay with smaller gains in the beginning of your career. So in the 5 years later, you're doing something incredible. Because think about it. 4% doesn't sound sexy with even 25K. You know, $1,000 wouldn't make my life different at all, or your life, honestly. So if you made $1,000 by the next 30 days, nothing changes. But if you just put that in the account, that becomes 26K plus 500. Don't know where that came from. Let's take that out. And if you keep growing that for 12 months, you become a 40K account, making $1,600 a month. Then 60, making 25. Then 100, making 4. The point is, when you get to the 5-year mark down here, you're making a $10,000 month. So everybody is taking the long route. But if you just took the slow and boring route and treated your account as something that should never be blown up, something that is going to help you replace your income over time, you're going to be in a better place to actually replace your income with a high degree of certainty. Because the fact is, if you go for the risky stuff, there's no way to say you're going to be consistent. Day trading is a struggle, and your strategy might work in this market, might suck in the next market. So when you do quit your job and your strategy stops working, how would you make money? But instead, what if you did the boring stuff? That stuff works forever. It's basically investing, because I'll teach it to you in a second, but you're not doing any type of intraday, 0-day option crap. This is stuff that should keep the account value relatively stable for decades if you do it correctly. And I'll talk about this in Rule 2, but the no BS Rule 2 is something that took me 3 years to figure out, is to sell more options. This account I showed you that's up 200K this year, I am only selling options on it. When I say I'm not buying them, that is because I'm only selling them. When you buy them, you're taking the bet that the market's going to go in a certain direction, and you have to be right about the timing of it and the velocity, the magnitude of the move to even make money. The people that are buying options statistically have a 30% chance of profit. So I'll pull that up here. But basically, if I go to option strat, which is going to have all the stats on here, if I click any option with any expiration date, you're going to see the chance of profit is 33%. And this is at the money. So if you go in the money, you might have a 40% chance of profit or a 42. It's still less than a coin flip. So how do you profit from a long strategy over time? It's not easy. And if you just flipped that coin and sold it, you have a 67% chance of profit literally on any single option. So what's the downfall of this strategy? There are some nuances. This isn't the video we're going to go into it. There's plenty of education on my channel to help you sell options better. But the point is, if you want to bat at a winning rate and hit home runs, you just have to sell options and stop being afraid of it. I even coach students, and they come into the program and they don't sell options for like 60 days. Like the win rate's so high, we're giving out winning trades on a weekly basis, and people are still afraid to take that first hit. Like that just doesn't make any sense to me. Like if you want to get more understanding and get more confidence, you got to get in the game. You just have to put the trade in. These trades are not going to zero. This is one of my favorite stocks of all time that has probably made me 6 figures alone this year, which is Soxl, SOXL. And Soxl is a stock that has never hit zero. It's come close. It's hit $7, but it's also ran 1,000% from that point. So this stock is not going to zero anytime soon. A lot of people are worried about selling an option, but you have to think about it backwards. Like, what are you really worried about? Losing money. How much money could you really lose? 50%, 20%. Let's say an actual number. But you can take a stop loss. You can get out at any point. It's not something that you're locked into until it's down X amount. So you have to get over that fear to succeed. And I'm just going to be real and honest with you. Back in 2019, that was the first year I sold a put option. I spent 3 years day trading, doing that same thing I was telling you about earlier. And that's why I made these rules, is because I made these mistakes. I'm not perfect. I'm trying to help you guys jump that learning curve that I had to struggle through. But I spent years putting in $3,000 and then losing it from day trading. And then I sold my first option on Spotify. I put in like 17K of collateral to make $300. Again, it wasn't exciting. It wasn't life-changing. Like $300 might have paid for a little bit of my mortgage or whatever. So that was the first CSP I put on. But once I put it on, the money came into my account within a week, and it was easy. I didn't have to watch the markets. I didn't have to time the markets. In the back of my head, I said to myself, listen, Spotify's an awesome stock. I would love to own Spotify. So when I sold that option, I had confidence to know the outcome was whatever way it went was good for me at the end of the day. If I made the premium, that's $300 I made without owning the stock. If it dropped down, I still made $300 and I got to own the stock at a discount. So you have to understand that option selling is a win, 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 win scenario. You're always winning. And if you follow my next rule, it's hard to lose with this strategy. I hate to say hard to lose. I hate to say this has a 95% win rate, 98, but if you follow this next rule, it's very tough to lose. And obviously from 2019 to 2020 to 2021, 2024, I've been able to option sell throughout that whole period of time, tweak my system, and create this insane consistency. And at this point, we've opened up a coaching program to teach people how to do it. But I'm going to go over now the third rule that's going to make option selling as no lose as possible. So rule number 3, if you want to succeed in the markets with options, buying or selling, is the trend has to be in your favor. They can make or break anything you do. And most people come, into the markets and they're always fearing a recession. It's like something I cannot shake out of them. They're always like, what do we do when the market goes down, Matt? What happens with the system? What happens with option selling? How would I adjust my portfolio? And it's like, it's just so frustrating to hear that. It's like every person all the time worrying about the market turning around. Look at the market here. This is like a monthly or weekly chart. What pullback would have left you in a bad place in the market? 0, because we're at all-time highs right now. There's literally no time in the market that a recession would have left you with a losing price for your stock. If you just held through the recessions and sold covered calls or positioned in more, like bought more stock during the dips, you'd have actually been in a better place. So the trend is something you can throw on your screen. The best things to add are EMAs, moving averages, like a lot of trend-based indicators that follow price and just average it out. Those will show you where the market's going. And if you just add like 3 or 4 moving averages or EMAs, like that's the one secret I give out around the world, but that's changed everything for me. Just visually seeing, hey, this is a bull trend. Hey, this is a bear trend. This is what we call bullish stacking, where fast is above slow. And then this is bearish stacking, fast is below slow. Those type of visualizations can help you sell options really easily. So trends make or break everything you do, whether it's day trading, option selling, investing. All you have to do is throw up a couple moving averages. It's so simple. But again, when the market's going up like this, if you want to succeed, if you want to make real money in the markets, if it's going up and the trend is in your favor, don't think about shorting it. That's like the dumbest thing. The thing I cannot shake out of students' heads is they need to go against a great trend. Like the minute I started going with the trend was the minute everything changed in my portfolio, because I, during COVID, was trading stocks like, I think it was like SoFi, Palantir, Neo, like the really cheap stocks before COVID. Like Neo was $5, it went to 50. My portfolio originally went from like a couple grand to like 300K. It was the biggest push I've seen ever, because I finally realized, hey, listen, when you go with the trend, it's a lot easier than trying to pick the top and hit that 2-3 week sell-off or 2-3 day sell-off that is so hard to time. I'm really great at timing sell-offs, but it's so much easier being with the trend, because the it's the duration is longer. And back in the day, I used to always listen to my dad call me up and tell me the market's too high, it's got to come back down, recession's around the corner. And it took me a long time to stop thinking that way. When people on the news, people in your life are always harping about a recession, you're going to have that ingrained in your mind. It's going to be hard to flip that mindset when you look at the markets. So take out those people, delete those thoughts in your head. Like, don't put that opportunity to keep hearing that over and over again in your day-to-day life. Like that one switch was a huge reason I was able to crush it the last 4 years. And so no BS rule number 4 is something everybody needs to hear. It's so big, which is get more boring. When you have success in the markets, get more boring. Like, whatever you're doing in the markets to beat the index is typically risky because the index are considered safe. If you're making 7% a year, it's safe. We teach our students how to make 5 and 10% a month. If you don't believe me, the portfolio is up 130%. That's over a 10% return per month this year. So it's not hard to hit 5. It's a little bit harder to hit 10. Super possible. But because you're putting on that risk, and you have to understand hitting over 100% in a year is risk. You're putting on risk. When you're putting on that risk, you want to take risk off in your life. So that's my big philosophy. And I'll tell you the story of how I developed this. But basically in 2022, I told you my portfolio grew from a couple grand to 300K. The business took off. I had lots of money, most money I've ever had in my life. And I took on more risk at that time because things went well, made a lot of money. I was stuck in that mindset of risk makes money. So I bought more investment properties, bought more stuff personally, like depreciating assets, things that don't help me out in the long run. Wasted money with businesses. Like, I tried to start a crypto mining business because I wanted to increase that payout by taking more risks and hitting like a bigger hockey stick curve, going from a mil to 10 mil, net worth, that type of thing. So the big mindset shift I had from 2022 was when the market dipped, when I took too much risk at the highs, I got hit a lot harder. And when you're playing survival mode in a down economy, in a tough time, it's a really scary place to be. So I put all my capital in these crappy things, taking risks, and then I was basically running around with my head cut off like a chicken and not enjoying the next 2 years when the market was falling apart. I was basically owning stocks at some crazy prices. I think the stupidest thing I owned was Fubo at $38, and now it's at like $2. Lot of lessons learned. So when people ask me, what they can do in a recession, it's just analyze the trend, honestly. The trend is going to tell you whether we're in a recession or not. But if we're in a recession, the decisions we make in the market are a lot different. But the point is, today, you've seen me make money on this channel. Obviously, the business is doing well. I'm getting more boring. I'm not making the same mistake in the past. And this is the biggest lesson to everyone out there. The market's going to shift. The strategy's going to suck for a little bit. We're going to have a recession eventually. And so what I did is I got more boring with my money. Instead of making 5% a month, I put my money in things that made 10% a year, 15% a year. So solar panels, they make me $300 a month, just saving energy type thing. There's tax credits with that. It's $30K to $40K I put in solar panels. I could be making $3K a month. I'm making $300. It's a lower hit for me. I'm not hitting as much of a home run with my money, but overall, it's setting my family and myself up for success because it's lowering my expenses. You want to lower how much money is coming out of the account at the same time as how much is coming in. It's a two street like battle there. you want to make sure you increase your income, but also decrease your expenses. That's like the ultimate war you have to win. I put my money into Airbnbs, buy properties, try to build out that portfolio. I have one property that did 40K this year. Expenses are like 25 to 30. I put like 150K in it. So making 10K on 150K, not that impressive. Real estate kind of sucks. There's a lot of expenses that can come up. So I might crush it one year. I might break even the next year. The point is, real estate's a really great way to park your cash with leverage. And if this property doubles, you're making a lot more because you put down less. You put down like 20% instead of a little bit more. And I also reduced my mortgage payment. That was something I was super opposed to before 2022, like before that big sell-off in 2022. When I was taking on risk, everyone's like, don't pay off your mortgage. Like, you could make your money work for you so much better in XYZ. Like, put it in the markets, blah, blah, blah. Like, I just like the peace of mind of having a low mortgage payment. And a lot of older people told me, just pay down the mortgage, Matt. And I didn't listen to them. I said, you guys are old. You don't know how to like make money, that type of thing. But realized over that 3-4 year stretch, it's nicer to have less expenses, period. End of story. Like, income's great. Less expenses are better too. And then lastly, rule number 5, this is the ultimate rule, the biggest thing that's helping me out, helping the students out. This is a core part of coaching, is blending capital. So if you have cash sucks. Cash doesn't do jack. If you have CSPs, you're now producing a return. So we call it like 1x relative to the other strategies. When you move from a CSP to a stock, you're making 2 times more because when you write covered calls, you're making the CSP income and then the stock appreciation. So it's a double-edged sword there. And then leaps, that's where you buy options. I know I said don't buy. I said I don't buy. But in some scenarios, I do buy with the other portfolio. I did that with Tesla, almost 300% return. I did that with MSTR, almost 300% return on this YouTube channel. So leaps offer the best leverage, the best returns, but there's only perfect times in the market to do it. For example, I like when you pull back to the EMAs here and then run. Happened here, happened here, happened here, happened here. So a lot of the recessions pull back to the perfect EMAs, SMAs. So there's moments in the market I'll throw on the highest leverage and hit it big. And those are where A+ setups come into play. So times in the market, you have to recognize when to be long. Because the fact is, you're not going to maximize your portfolio always selling puts. When I say I made 130% return on this portfolio, many times in the market, I was doing 20% CSPs, 80% stock, like in a lot of long positions for stock because the market was primed to rip. A lot of times I'm only in CSPs, like 100% of my portfolios in selling puts because the market is sketchy. It's going to pull back. So I have to be ready for that, be ready to own stocks later. And I don't want to own them now. There's scenarios where you have to recognize both. And that becomes with knowledge, wisdom, a system. And so that's all I got today. I'll link a video on my other option trading rules for success that I released last couple weeks ago. And if you guys like this video, want to get coached, click the link below, fill out an application, and we'll see if we can help you guys make 5 or 10% a month. Peace out.